Okay, everyone, what's going on? Wow. Okay, we got a lot to talk about today. These meme stocks are just going absolutely crazy. So on this morning's stream, we are going to be spending our time talking about these meme stocks. We need to go over what's happening with them. I'm going to talk quickly about the GME position that I had on last week, and then talk about maybe some trades that we should be getting into here, because these things are just absolutely ripping to the moon. And I would actually love for this live, for those of you that are currently joining us, share your thoughts on this whole Wall Street bets phenomena. Things that we've become aware of recently are the retail traders actually make up a very large portion of the option volume these days, something like between 10 and 13% of the volume. So they can move markets. But do you think situations such as Blackberry and GME are one-off situations? Or do you think that this will become the new norm where Wall Street bets type people will continue to push these up like crazy? And if so, what are the opportunities for us? Should we be trying to front run it? What should we be doing here? And guys, as we go through this stream, if you do find this information valuable, please make sure to leave a like and subscribe to the channel. It just allows me to keep doing this, knowing that you guys are actually enjoying it and getting some value out of it. So with that being said, let's hop into it right now. Let's talk about what's going on, starting with GME. So GME, look at that. Vols are just through the roof right now, right? Absolutely insane. Stocks up 83%. This is just like unbelievable. This is just unbelievable right here. Besides it being unbelievable, there's not a ton to say. We can see that we're pushing the all-time highs like through the roof, right? Average implied vol here is 110%. We're seeing it at 390 right now. But here's the thing. A lot of people would look at this, right? If we pull up GME on the vol scanner here, it's going to have, what's its IV rank? IV rank 100, right? So, sometimes people would come in here and be like, wow, vol is so expensive, I'm going to sell it. So doing that right now would be a massive, massive mistake. I was short vol on it last week, back when it was floating at around $42, $43. But the reason I was short vol is that the realized volatility had actually dropped off. So if you remember last week, Monday it moved 14%, Tuesday it moved 15%, but then it stopped and it moved like 1% or 2%. And one of these principles of volatility that we know exists is that volatility tends to cluster. Meaning if today was a big move, tomorrow will be a big move. But when we saw it the next day be a small move, my hypothesis was that the day after would also be a small move. And I was correct for the first day. And then after that, realized vol picked back up. The stock in the morning moved 15% and I exited my position. I realized I'm wrong. That was at around $53. So I took a loss. So you'll see when we get the trade journal up here, first trade's on GME. It's going to be a loser. Hurt a little bit. But in the end of the day, we made the right move cutting that position. A lot of people would be like, the vol is still so expensive, I'm just going to hold it or roll my position. But doing that would have been a big mistake. Sometimes you just need to know when you're wrong and get the hell out of that trade. So that's what we did with GME. But the question that we always need to ask ourselves is, well, what now? Right? Clearly, we exited that trade. All's good. We lick our wounds. We come back stronger. But what do we do now? Is there a trade to be taking here now? And the first thing I would say is that you should not be shorting volatility right now. Reason you shouldn't be shorting volatility is the stock just doubled in price in one day. You'd have to be batshit crazy to short this thing right now. So don't do that. But what we can maybe do is structure out, some sort of, directional bet here, right? Let's say you think that the Wall Street Bets crew is just getting started. this thing's going to continue to move up. Well, there's a couple of different things we can do. If a lot of people might be tempted here to say, you know what? Start feeling that FOMO and just buy a call. But I'm not sure if that is the right move here, because in the end of the day, you're going to be paying so much for that call that it's just not worth it, right? That FOMO might drive you to buy something that's too expensive. Lalo, I have no idea what price this thing's going to end up. Predicting price is actually very, very difficult. And anybody who tells you what they think the price will be tomorrow is just telling you what they think. There's really there's minimal evidence to support what they're saying almost always. But what I can do is I can help you structure out a trade if you think it's going to go up or if you think it's going to go down, right? Given the volatility characteristics, volatility is a lot easier to predict, and knowing these vol characteristics for the option space, we can structure out something a lot better. So let's come over to Thinkorswim here and maybe look at the one thing that's going to be really messed up here is we don't have strikes right now. Right? We don't have the strikes that we need. Let's see here. Yeah, so we might need to wait for them to add more strikes. Isn't that crazy, guys? Yeah, we only got up to 115 here. I don't think even for this short ones we're going to have anything. Yeah. But what I would honestly recommend is when they have the more strikes out, do something like this, right? Come here and buy just a vertical, right? Like, in the end of the day, you're just going to want to put together a vertical like this. Right? Why is this, something that's worth doing? Right? The reason why something like this is worth doing is that you get this crazy risk reward, right? You're going to get yourself into a spot here where these calls that you're selling are just so expensive, right? Jacob, yeah, so what I'm just saying here is the calls are just too expensive. Like, even if you think the stock is going to go up, they have to go up so much in order, which it has done. I'm not saying it hasn't done it, that you could be right on direction and still lose massively. So what I would be doing here, if I were you, is I would be looking to put on some sort of vertical spread, right? Something along the lines of this, right? Where, sure, you have some risk, but if the stock does rally hard, you're going to get paid out, pretty good, right? You're going to get paid out like 300%. And that's the trade that I would be looking to structure for something like this. I would be looking to do a vertical to the upside or to the downside, right? Like, even these these puts here, so expensive, let me see how I'd structure this. Like, maybe there's nothing really to the put side in that sense. Let me see what we got here for the puts. Let me see. Yeah, it's just so expensive. I would definitely be doing some sort of vertical. It's one way that you can really grow your confidence that if you are correct on direction, you're more likely to get paid out. It requires a lot less, buying power, first of all, and it requires you to be less right in terms of the size of the move. Right? We can see here also, GME coming back down in price a bit. Just remember this. If you're in a spot right now where your decision making is coming because you've seen these people talking about it, you probably actually don't want to be trading this. If you don't have a real view, I would stay away from it, because you could get yourself into some trouble. Right? It's a pure gamble if you don't. And in the end of the day, the number one thing is live to see another trade. So don't bet it all on something crazy happening here. It's if you weren't thinking that prior to seeing this move now. So let's see. That's really all I have to say about GME. Like, unless you guys have something else that you want to talk about with it, I'm just not seeing That a vertical to the upside would be the only thing that I would personally take a look at. There's nothing else that really catches my eye for it. But we have a couple other meme stocks that are absolutely worth talking about today, namely Blackberry, which is the Wall Street bet guys are calling GME 2.0. We see something here. Lalo, that's actually not a bad idea, right? If you just think the stock is going to go up in value, buying the shares is not a bad idea at all, right? Picking up those shares, I can totally get behind that. I'm personally not bullish on the stock, so I won't be joining you on that. But I got a lot of respect for someone who says my only view is that the stock will increase in value. So I'm not going to trade the options because I have no view on volatility. So, I like that approach. Now Blackberry, right? Blackberry is one that we should be spending some time talking about here. Just seeing if the group has any ideas. Okay, nothing too helpful right now for the stream in particular. But let's talk Blackberry, right? So what's going on with Blackberry right now? Let's refresh, take a look at the news here, right? Things sitting at $20. Looks like the Wall Street bets crowd might be correct here, guys. Right, stocks up almost 100%. Signed an exclusive deal. Yeah, so what I've basically been reading is they've sort of redesigned their business. They got rid of the phone side of it more or less, and they're sort of more like software now. Which, I don't really see that as new news. That's sort of been their thing for a while. But regardless, the stock is just through the roof, right? If we come back to the terminal here, we can see implied vols and forecast of vols all really high. So what we're basically saying here is, sure, the market is saying that this stock is going to move like crazy, right? IV rank is at 100 again. But keep this in mind, right? When we're placing these trades, it is all about where do we disagree with the market. And in this case, I more or less agree with the market that this thing is going to continue to move huge. Right? This thing is not going to stop moving anytime soon. Realized vol is high, implied vols are high. Look at this. Call volume for today is through the roof. Think about this, all right? January 25th, today, we are already seeing all-time high call volume. And it is 1 hour into trading. This is absolutely insane. This is like probably the craziest stuff I have ever seen. We could see this continue to push the implied vols for the, see the price of these calls continue to get pushed up as we go throughout the day here. A couple things that we could maybe do is we could be, structuring something into this crazy skew here. Let's pull up Blackberry. Let's look at a couple trades. Let's say we want to trade the weekly here. We maybe want to buy a vertical. Yeah, GME is just going crazy right now. Right, so check this out. Let's see. Right, you can get a 2021 digital on Blackberry for 10 cents, where you get a 9-to-1 risk reward if this thing goes up. This is what we want to be doing. Trades like this, okay? Let's see if we move it out of the money a bit. How does it look? Right, about the same. Right, so this 2021 vertical on Blackberry looks pretty damn juicy. You're getting a 9-to-1 risk reward if Blackberry goes above $21 this week. So this is actually a pretty solid trade. I would totally look at putting something like this on. If the stock continues to rally, you'll make bank. It's that simple. So just to go over that one more time, this is the trade that I'd be looking to structure for it. It is a vertical, right? A really tight vertical at the money for Blackberry, betting that Blackberry goes up. And the reason we're able to do this is because we see that this implied vol is just so high. We have this call skew that we can take advantage of. The level of vol is so high. There's all these different reasons why we can do this, but basically looking like a pretty damn juicy trade. Let's see if there's anything else that we can do here. If we do this quick, we don't have enough strikes for anything there. Was it trading at 20 bucks? They're not going to be able to go out far enough for this to be worth it. Let's see. All right, 130. All right, you can get a little bit better of a risk reward if you think the stock's going to go up a couple bucks this week. But I wouldn't be doing this, right? The reason why so think about this. We have two different trades we can look at here. Betting on Blackberry going to the upside. I hope my buddy Kua is here because I know he was looking at this stock. All right, so number one is this vertical where we are going to get a 9-to-1 risk reward, right? So we're going to risk 100, or we can risk way less actually, right? We can drop this down to a 1 lot, right? The thing I love about this trade, you can throw them on for super cheap, right? Let's throw these down to 1 lots. Right, so look at this. You risk $10 here to make 67 bucks, okay, on this vertical. Right, looks like it's actually gone up in price already. So buying it at the start of that would have been it's already printing. Right, so look at that. The risk reward just keeps getting worse and worse on it now, actually. But you can get, a 2-to-1 now, 2-to-1 risk reward. Hey, Arya, I'm going to be looking at AMC right after Blackberry. Right, so now you see back down to 20 cents. You can get a 4-to-1 risk reward right now, betting on Blackberry going above $21 in this week. But the other trade we can do is this butterfly, where we can get a almost like 15-to-1 risk reward, right? 15-to-1 risk reward, once again, betting on Blackberry going up in the near future. But what we're also doing is capping where we think it'll go to. So if you think it'll go up, but not higher than $23 this week, you can get a potential massive, massive payout if you're correct. 1,500% putting on this trade right here. And you're able to put this on for super cheap, just $13 per lot. Now, in my personal opinion, I would not be doing this butterfly. I would be doing this vertical because I don't know how much this thing will go up, but I think it's fair to take a bet that it will continue to go up. This whole Reddit Wall Street Bets phenomena is very, very interesting. I wouldn't mind taking a bet in the direction of a stock like this that's picking up momentum with them. However, I wouldn't just be going out and buying the calls, because here's the thing. Right, let's think about how this call buying actually works, right? We'll slow down for a second here and really break this down. Imagine that you're a liquidity provider, right? So you sell options and you see something like GME happen. Then you see similar sentiment for Blackberry and it gets the big move. Well, what are you going to do? Are you going to sit there and just say, here's your call options, just buy as many as you want for what I think is a fair value? Well, what you might actually do is you might step back and stop providing liquidity. Okay? When you step back and you stop providing the liquidity, well, the value of these calls starts to go up like crazy. But, it's like, I don't know what's going to happen here right now. I still need to do a deeper analysis. What do you guys think? What do you think of these two trades that we're looking at for Blackberry here? Would you take either of these trades? I would love to know what you're thinking, because the vols are through the roof here. I wouldn't just be short vol, but I wouldn't just be buying options either, because they're going to be so expensive by the time anybody's willing to provide you liquidity. Doing something like this vertical, I think, makes a lot of sense. We need to really step away from the whole FOMO thing, right? We need to, like, I feel it too. I look at these and I'm like, man, look at me working my ass off to make a few bucks here, and then this bastard just bought a way out of the money GME call and outperformed like crazy. Right? That vertical that you would have bought for 20 cents 5 minutes ago was going for 53 cents right now. Pretty crazy. This is pretty crazy. You would have already been up 100%. You gotta find these cheap structures, right, that allow you to express your view. This is really good stuff. This is really, really good stuff. That vertical, let's see what it's going for if I unlock it. 23 cents. The vertical would have been up 100% right now too. Crazy. Absolutely nuts. So yeah, those are the trades for Blackberry. I could spend forever talking about it, mulling over the different things we could do, but let's move on to the last meme stock of the day, AMC. Let's see what we're going to be talking about here. Similar situation, another one of the darling children of the Wall Street Bets community. Implied vols, crazy bid, right? Forecast pretty high as well, right? We're not saying this thing's not going to move. We're actually saying this thing's going to move like crazy. Still thinking that the vols are a little expensive. Option volume, Friday's peak was at 362. So far today, we've already seen 102,000 in terms of call volume being traded. Right, pretty damn crazy. It looks like about 20 days out is where the vols are at all-time highs. So that is probably where I will be looking right now. Crazy thing. Check this out, guys. The implied move for their earnings in 1 month from now is 34%. Are you kidding me? Like, this is just insane, right? Absolutely insane. I'm going to be keeping an eye on this as we approach their earnings date. But what I'm seeing right now as something that's super interesting is, okay, we got a similar situation here. Wow. Look at this. This might just be bad data because it's moving like crazy, but I think we could do another really crazy vertical here. Get a really good risk reward on AMC. So I'm going to go quickly price that out. AMC. We want to be trading something short dated. We'll trade the 29s again. Hold up. Stock's still so cheap though. It's just nothing, right? Let's see here. Like, it's so cheap. Honestly, I don't even know if I would be personally trading this, but let's structure it out. Take a little look here. Right, it can cost you 11 cents to put this on. And you're going to get about a 4-to-1 risk reward doing this. That's not bad. What if we come here and we maybe structure out a little 1-3-2 type thing here? So we could go 4.5 to 6 to 7. 5 to 6 to 6.5 maybe? Okay, let's have a look at this. Butterfly. 5, 6, 6.5. Let's take a look here. Okay, so this looks pretty cool. I would maybe do this with AMC. You're risking about $12 per contract for a potential payout of almost $90 per contract, right? So you're getting about an 8-to-1 risk reward, betting on GME increasing in value by about 20% in the next week, right? Perfectly, it'd be about 20%. Looks like a pretty good trade to me. Like if you're bullish, right? The one nice thing maybe about this smaller stock is, this looks pretty good here. Since it's so hype, spreads should be pretty damn tight, right? Super tight. Spreads are there for you. It's pretty liquid. Commissions are going to cost you a lot on this, so you do need to pretty much see this thing go to $6, for you to make some good money here. Lalo, in terms of this thing turning out like GMC, it's so hard to actually say that. Like I can't really give you the best answer I could give you is honestly just I don't know. Right? A lot of people will play both sides and be like maybe this, maybe that. In the end of the day, I have no idea. Like this is a pretty rare thing that we're seeing, right? We've never seen something like GME before. Like that, it blew my mind. Right? We're seeing AMC rally, we're seeing Blackberry rally, we're seeing the Wall Street Bets crowd talk about this being the 2.0s of GME. But you have to remember that there is somebody on the other side of this trade, and they're not there to give Wall Street Bets free money. And they are also, in my opinion, they're smarter. So they will figure it out, and they will come out winners in the long run. However, what that means for right now, I'm not 100% sure. I would personally be betting on things continuing to rally a little bit. And I'd be doing one of these two structures right here, right? Because you don't want to just be buying a call. Let's look at what buying a call looks like. Right? Let's say you just buy the $5 call here. Right? Look at this. If you buy this vertical, it costs you 11 cents. If you just buy an at the money call, it costs you $1.24. You break even if you buy a call. If you buy the weekly call, you break even at $6.24. In order for you to make 100%, this thing basically has to double in price. Like, what sort of lunacy is this? It makes way more sense to take advantage of the call skew, the overpriced volatility, and structure out a vertical if you're bullish on this thing, right? Look at this. You can make 400% if the stock goes to where you would break even on the call. This is 100% the way to be doing it if you're bullish on this thing. Besides that, Malik is asking, is it possible that there's no one on the other side of our trade? So that is not possible. Somebody has to be there. You can't buy something if nobody's selling. Now, in terms of who is on the other side, it can be challenging to figure out, but that's a part of what we as traders need to do. Think about we always want to know who's on the other side. It's like a poker saying. It's like the most important thing in poker is to understand is to pick the right table to play at. If you're a professional poker player looking to make some money, you don't want to play against other professionals. You want to play against, the tourist who's had, maybe 10 drinks today and he's a little loose with his money. You want to pick the right spot to play where on average you'll come out a winner. And that's kind of what I'm saying right now. It's like, it can't go on forever that this type of thing with GME happens, because smart people just won't play that game, or they will dig deeper into that game and find a way to come out winners, right? In the end of the day, GME did rally, right? GME did rally, but imagine if that call cost $200. Well, all of a sudden you still lose money, even though it went up like crazy, right? So there is there will come a point where the premium will be enough on average to make it worth selling it. It's not worth selling these things right now. But what we can do is, if there's somebody there to sell it, something like this vertical, right? This vertical just got even better, right? 6 cents right now. So you can get a credit for this butterfly. That can't be correct. That would be an ARB. That would be a 16-cent free money right there. I know Eric's pulling that up right now. He's like, wait a minute, whoa, what? But yeah, look at this, guys. Come on. You're getting a 9-to-1, 8-to-1 risk reward here. It's a no-brainer to put on something like this if you are bullish. Hell, even if you're not, it's a little lotto ticket betting on this thing going to the upside. Rallies another 10%, you're going to be making some bank. So, any questions about those stocks that we looked at today, right? We've looked at Blackberry, we've looked at GME, we've looked at AMC. These are really the stocks that we everyone's talking about right now. It's absolutely insane what's going on with them. Once again, to recap, the main trades that I'm seeing here for all three of these is, if you are bullish, do not buy the call. What you should do is take advantage of these expensive out of the money calls by structuring something like a vertical. Now, normally when I break down these trades, I look at two types of structures. I look at verticals, and I'm looking at these unbalanced flies. For GME and Blackberry, I would not trade the butterfly. I would trade the vertical because we don't know how much this thing could rip. Right? Henry, I actually have no idea if it could rip. What we're trying to do is say, if it rips, what is the right trade to put on if we think it's going to? And I would be putting on a vertical like this on AMC, and I'd be looking at doing something like this on GME as well. The issue with GME is we don't have the strikes that we need. Let's see if things have changed a little. Right? It's at 132 now. It's just fucking crazy. Right? I think I was looking at something like this. All right, this vertical would have printed. It would have absolutely printed by now. But so for GME, you'd look to do the vertical, or if not, just buy the shares. For Blackberry, I would also be doing the vertical, right? Pull that up quick. And yeah, vertical like this, where you're getting about a 6-to-1 risk reward, right? 6.5 to 1 risk reward on this trade. If Blackberry goes up, you're going to make money. I wouldn't be doing this one because look at how tight that range is. If the stock, goes up $2, $3, you're going to be losing money here, right? We have that capped upside. And on a stock like this, I don't know if I would want that. Even though you get the best, look at this risk reward. You risk $3 to potentially make 172, right? Like maybe it is worth throwing this on just for a fucking laugh, just for a laugh. I would throw this on. The payoff is just absolutely nuts. Risk a couple $100, make 10 grand if you're right. Low chance that you're right, but hey, it's good. It's pretty fun trade. And then for AMC, I would be looking to do a vertical like this, right? Where I'm getting about an 8-to-1 risk reward betting on AMC going up. I would either do that or some sort of vertical like this. You're not going to get this right now because no one's going to give you this type of an ARB. But, okay, there we go. Now it corrected. It looks a lot better, right? You're risking $130 to potentially make, 8.56. You're not getting too much better of a risk reward, just a little bit. So this vertical is maybe what still makes the most sense. So with that being said, those are really the stocks that I wanted to look at today, guys. Let me know if you have any questions. I'm going to be hanging around for a little bit. But if you found this live valuable, please make sure to hit the like button. It really helps me out. It's really all I ask in return for doing this live. And if you want to stay tuned for other lives coming up, you can subscribe and hit the notification. I go live like this every single day. And we actually have some really, really cool content coming out in the near future as videos. And one last thing, because every time the stream gets above 20 people, I want to do a little reminder. This is something I'm doing right now only for the people on the stream. I'm actually going to be doing a 1-week free trial for everyone who's here to be using this Predicting Alpha terminal. This is basically the only option dashboard that any serious trader would need. It helps you forecast future volatility, find market inefficiencies. It is the one tool that I have used to find really good trades. It's really that simple. We're always updating it, adding new features. All you need to do to be eligible for that 1-week free trial, which I'll probably be starting in early February, is send me an email. I've just typed my email into the chat there. The way it's going to work is you're going to subscribe. You'll have 1 week free. If you hate it, you just cancel, right? No bill, but you'll get a lot of free stuff with it, right? You also get all your earnings info, obviously. Yeah, good point there, Eric. So yeah, that will be coming out in the next little while. Send me an email if you want that free trial. Because you guys hang out with me so much, I always wanted to, I always want to make sure that you guys get the first dibs on something like that, because there will only be about 50 of them being given out. Sam, we went over GME towards the start of this. If you want to structure out a trade betting on GME going up, do not buy the call. Look at doing something like buying a vertical, but you're going to have to wait for more strikes. So, yeah, you can watch the replay if you want to see what's going on there. All right, guys, that is going to do it for this morning's live. Remember, we're going to be back at it again tomorrow, so hit that subscribe button. We'll see you then, and good luck with your trading today.